Well, this could be it. According to multiple CEOs, they are saying that this is the Trump recession. What we are currently experiencing right now is troubling because this is the recession. But as we are dipping into these tougher times, millions and millions of Americans are wondering, what do they do? Do I cash out my portfolio? Do I take money out of my 401k? What do I do? Do I sell my home, sell my car? Do I change my job? Well, we're going to answer some of these questions today because multiple CEOs, the CEO of BlackRock is sending his warning. The CEO of JP Morgan Chase, Jamie Dimon, is also issuing a warning as well. You need to listen to both these people because, again, these are two major players. And what these two say is what's probably going to happen. So again, I'm going to break all this down in just a moment, explain what is going on and how this will likely impact you. But before I do, all I ask is one thing. It takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now let's begin. So yes, everybody believes that we are already in a recession or we're headed for one. This will be inevitable. Just look at this. This says CEOs think the U.S. is probably in a recession right now. This is according to BlackRock's Larry Fink. Now, I want to read a little of this to you. It says right here, BlackRock CEO Larry Fink said Monday that many business leaders believe the United States economy is already in a significant downturn. Most CEOs I talked to would say we are probably in a recession right now. One CEO specifically said the airline industry is a proverbial bird in a coal mine, canary in the coal mine, and I was told that the canary is sick already. You've seen this. We are seeing airlines potentially go under. Some are trying to merge. Others are just trying to pretty much get bought out. But what we have seen over the past year is airlines are struggling. We are seeing this. But it's not just airlines. Okay? Banks are struggling. Businesses are struggling as well. Let me read this to you as well. It says the asset management executive also said that he thinks the tariff policies of President Donald Trump could put upward pressure on inflation and make it difficult for the Federal Reserve to cut interest rates, as the central bank often does during recessions. Keep this in mind. If we are in a recession, which as of right now is looking highly likely, but if we are in a recession, what normally happens, okay, unemployment goes up. We saw this over the past 2 months, unemployment has gone up, okay? That's one issue. But we also see the economic decline. People are not spending money like they used to, okay? There's a decline in GDP. When this happens, again, this is the definition of a recession. But when we see a decline in GDP, what's one thing that can actually boost spending? The Federal Reserve comes in and they lower interest rates. Here's the problem. With tariffs, inflation's going up. It's going up, which means in order to push inflation back down, guess what the Federal Reserve has to do? They raise interest rates to bring inflation down. They have to raise rates to cut spending. And when we cut spending and the U.S. economy suffers, then we see inflation come down. That's an issue because the Federal Reserve and Trump are not aligning. This is a huge issue. They are just clashing right now. I want to show you this one as well. JP Morgan CEO Jamie Dimon says Trump tariffs will boost inflation and slow an already weakening U.S. economy. I want to read you some of this as well because, again, what Jamie Dimon says, he sees the writing on the wall. This is the CEO of the largest financial institution in the United States, JP Morgan Chase. If JP Morgan says something's happening, if the CEO of JP Morgan says this is what's going on, this is what we are seeing from our customers, they have so much data. They have so much information that even the Federal Reserve and the White House aren't going to have. When JP Morgan says this is what's going on, you need to listen. So listen to this. This says right here, Whatever you think of the legitimate reasons for the newly announced tariffs, and of course, there are some, or the long-term effects, good or bad, there are likely to be important short-term effects. We are likely to see inflationary outcomes not only on imported goods, but on domestic prices as input costs rise and demand increases on domestic products. I said this before. Just because we put tariffs on products from China and Europe and Mexico and Canada doesn't mean the prices for the goods here in the United States stay flat. Because as the tariff prices come up here, let's say it's for a car, okay? And now a new car price is $50,000. Guess what? Now all the companies that are selling the cars here in the United States that are manufactured here in the United States and they aren't really increasing their prices, guess what they're doing? They're thinking, you know what? We have a big gap. There's a big gap between our competitor and us. What we should do is just raise our prices a little bit. Just a little bit. That's exactly what's happening. And it's not just on things like cars. Okay? It's on everything. Clothing, shoes, okay? Any electronic that may be manufactured here. Again, everything's going up in price. So just expect that. Listen to this as well. Jamie Dimon says, whether or not the menu of tariffs causes a recession remains in question, but it will slow down growth. Just so that you know what a recession is defined as, a recession is generally defined as a significant and widespread decline in economic activity that lasts for more than a few months. It's typically characterized by a decline in gross domestic product and other economic indicators. This is normally consecutive months of negative GDP. That would be a recession. According to one CEO, he says, and I quote, "This is the textbook definition of a recession. We are seeing a decline in household spending. Layoffs have been constant for several months. Wages are somewhat flat. Inflation is going back up. And all of this will reflect in the real GDP number." Yeah, that's what we're seeing. But like I was saying, CEOs say this is the Trump recession. I want to read a little bit to you. Okay? Look at this right here. This says, a majority of CEOs, 69%, expect a recession, according to the survey, with over half of those CEOs saying the downturn will hit this year. 3/4 of the CEOs do expect a recession to be moderate or mild rather than severe. Okay, so what does that mean? Well, JP Morgan just raised their odds of recession to 60%. Okay, 69% of CEOs expect a recession in 2025, but they say it's going to be moderate or mild, meaning it's going to be very minimal. Okay, but it's still going to be a recession. They also believe it's going to be short. Okay, so it's not going to be something that this recession lasts for, let's say, 6 different months, right? Or it lasts for, 2 different quarters. Okay. It couldn't, yes, obviously, because that's the definition. But here's the thing. It's going to be very minimal. So yes, even though it's still a recession, even though businesses are going to be laying people off, okay, what they're expecting right now is this is going to be the minimum recession. Okay, so about 6 months. Some believe we've already been in a recession. Let's say we've been in a recession for the past quarter, right? That means we're almost out of it. But guess what? Here's where things get very interesting. President Trump is negotiating these tariffs. China hit the United States back with reciprocal duties, and President Trump came out today and said if Beijing doesn't roll back their reciprocal duties, the United States is going to hit them with a 50% tariff. Okay? So what we're about to see is this could potentially turn into a trade war, or this is likely going to work itself out where all countries are going to start coming together, negotiating with the United States to not just better the U.S., but better every single country as well. And that's what we need right now. We need some certainty in the markets, in the entire world, because right now we just don't have it. I want to show you this one as well. Okay, recession fears grow over Trump tariffs. One of the reasons why we are seeing people are concerned is because people look at their their assets, their net worth. And again, even though it's not technically, their net worth is not technically liquid and they can spend it, they still look at their net worth. So let's say you have a net worth because you're adding up all your real estate, subtracting all your debt from your assets. But let's say you add up all your real estate, you add up, let's say things like vehicles that are paid off, you add up your portfolios, your 401ks, right, all your retirement accounts, you add up everything. Let's say you have a net worth of $1 million. Right, you're probably thinking, okay, I'm doing pretty well. But here's a concern. Once real estate prices start coming down, they haven't yet, but once they do, they start coming down. Okay, now your net worth isn't $1 million, now it's $850,000. Okay, still a decent amount, but it's not what it was. It's not that $1 million. And then you look at all your vehicles, and let's say, okay, I was at $850,000. Now, because the prices coming down for vehicles, they're used, right? There's some issues there. It's probably came down about $50,000. So now my net worth is $800,000. Okay. Then you see the stock market sell off 30% in the past couple days. Okay. Well, we've seen the stock market completely tank. Now, I know it's not 30% in the last couple days, but some stocks have. Let's say it's down, 10%. So instead of $800,000, you are now at $720,000. That's a big step down from what you were just at $1 million. So this is why people stop spending money, because their net worth just dropped. So, psychologically they're thinking, you know what, my net worth is not where it was, so I'm going to stop spending money for a short amount of time. And I said this before, I look at cars all the time to see about finding a good deal, something that's going to hold its value. And over the past couple of days, I haven't really done this. There's some cars I was thinking about going to buy, and it's like, you know what, I'm not going to buy that. I will not buy that, because I know once I buy it, if this continues, that car is probably worth about $10,000 to $15,000 less, probably in the next month. And so I waited. I'm going to wait. Not going to buy it. So even though I'm not too concerned, right? I have money saved up. I have stuff in retirement, whatever, right? That doesn't matter, because again, when your net worth is dropping, you stop spending money. And it's not just the millionaires and billionaires. It's every single household. Every single household is going to do the exact same thing. They're going to stop spending money because they are concerned about where we're headed. So we're going to see what happens. All I can tell you right now, there's a lot of discussions, so many discussions, okay? But listen to the warnings of these CEOs. BlackRock, major player, okay? The CEO of JP Morgan Chase, Jamie Dimon, again, major player. Why is Warren Buffett sitting on so much cash as opposed to investing into the market? Again, major player. These are people you need to listen to, because these are people that are going to likely steer us in the right direction and steer us out of a potential recession. So we're going to see what happens moving forward, but that is what we know as of today. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.